Hey money magnets, it's your Uncle Charters. Hope you guys had a great trading day today. S&P 500 decided to show some bullish continuation. It still manages to stay above the 5 DMA, giving us this bullish engulfing candle. Looking at the intraday action, you guys can see that intraday SPY was chopping. And as a guy that trades watching the charts, trade with the charts, it was like watching paint dry. It was very challenging. My patience was tested and we didn't get a move until the very end of the day. That 663.7 level was very important though. As you guys can see, that's the yellow line, and multiple times on the 15-minute chart, it was tested as a resistance. And it started yesterday. I wrote in my Discord, this was yesterday, guys. Yesterday at 11:02 a.m. I wrote, very volatile day with 664.5 failing as support. With the choppiness, we'll need to adapt and look at the range of the morning, which is 663.7 to 665.3. I wouldn't trust anything unless the range breaks. If 665.3 clears, long, and if 663.7 fails, go short. Stay in cash position if price is within the range. That was a plan from yesterday, and we can see on the 15-minute chart right there, right around 11:15 candle, we broke down 663.7, triggered puts, retested it as a resistance before it pushed down to the lower targets, and even tested as resistant again at the end of the day. And today, I watched that same level, which I wrote in my Discord. This one was this morning. Bears did well defending the 663.7 level as resistance yesterday. They must do it again and take down the 661.8 level to put 660 or lower in play. If 663.7 clears, 665 plus will be in play. You look at that price action for hours, all day long. SPY was range bound. 661.8 held as support, as you guys can see, based on that purple line. And then the yellow line continued to hold as resistant. That was the 663.7 level. But it wasn't until the end of the day when we finally got the breakout around 2:15 candle. I wrote, it's been a day of watching paint dry, but perhaps an end of day move is the plan. Watch behavior here at 663.7. If it clears, 665 finally incoming. And boy, oh boy, did it happen. Gave us the close on the 15-minute chart. That candle and that candle, 2:15 and the 2:30 candle. Uncle's watching that 2:30 candle. I wanted to see if it can turn that 663.7 into support, and I saw that there was buying pressure, and I let the group know. 663.7 did clear, and as long as above, 665 and 666 plus are in play. Beautiful. It made us wait all day, but as you guys can see, it was worth the wait. Gave us a couple of dollar move before that end of day pullback there. But overall, the breakout of that 663.7 cleared, it stayed intact, and I'll be watching that level again still for tomorrow. As long as above that level, because we saw on the small time frame how much the market makers were respecting that area. So as long as above, I would be bullish on the SPY. The next levels that SPY needs to clear now is that number 666. I think we close at 666.18. So that is, it's a weak close, it's a weak breakout, but if it could stay above it, which is not in the aftermarket, but if it clears tomorrow, 667.3 would be the next target above, and then new all-time highs above that, 669 and 670.4 based on the fib extension would be my next target. As usual, guys, if we are going to get bearish and play a bearish setup, no problem playing at level to level intraday, but if we're talking a multi-day move to the downside, we need to see a false breakout setup, which means a level that was cleared today needs to fail tomorrow or the coming days. We need to get multiple closes below the 5 daily moving average, as well as that 20 daily moving average that's also sloping up. But based on what I'm seeing right now, the bears have one opportunity to start turning this chart bearish. First thing they need to do is, at all costs, do not let the price go beyond the previous all-time pivot high, which was at 667.3. Why? Because they'll need a double top. Now, we can also see this low from September 25th. A potential M pattern is what will be needed from the bears. 666.3 must clear, but they'll still need to break down 663.7. They'll need to break down that 5 DMA, which is around 662-ish. Lots of fib levels that I have that I can mention, but I'm definitely watching that 20 daily moving average as a critical area, which is currently around 657.6. But we're looking at the pivot low at September 25th. That is at 654.4. So if the bears want to turn this thing bearish, those are the levels they must break down and try to get an M pattern to play out. But I tell you, that's a tall order. Do I think the bears can do it? As of right now, I don't. I don't see any evidence on the charts from the bears of being bearish. We're above the 5 DMA. We're well above the 20 DMA. And if I go to the weekly chart, which I rarely do, but if I go to the weekly chart, we're also above the 5 weekly MA, the 5 WMA. I see no reason to be bearish just yet, unless the scenario that I mentioned of a potential M pattern, unless that can play out, it's a show for the bulls. It's a buy the dip market. So as mentioned earlier, bullish confirmation for tomorrow is that it needs to stay above 663.7. Lots of actions at that level. You can see on the 15-minute chart, the yellow line there. Lots of action at the level. The market makers were defending it as resistance since yesterday. But at the end of the day, they failed. They could stay above that level. Clear 666. Clear the previous all-time pivot high at 666.3. New all-time high incoming. So you guys have my levels. You guys have my setups. Do you have my opinion? My opinion is that we're still bullish unless proven otherwise. And I'm always open to being proven wrong. I'm always open to that. But right now, bullish engulfing candle, clearing resistant levels above multiple moving averages. I just don't see any bearishness as of now. Moving on to triple Q. I'm wondering if triple Q can also give us its own potential M pattern, but right now it's not looking like the case. It actually closed higher than it did yesterday. It found buying pressure. It tested that 5 DMA and triple Q bulls found buying pressure there. If there is bullish follow through for tomorrow, 600, 602, and 604 must clear tomorrow to put 606 and 607.8 in play. If we are to get bearish, we need to see 598.5 fail. We need to see 597 fail. That'll get it below the 5 DMA. And maybe we can go retest September 25th low, which is all the way down at 588.5. Below that level, I would be bear biased for the potential M pattern. But the only way we'll get down there is if we break down 598.5 and 597. Otherwise, I recommend staying bullish and favoring more upside. Speaking of favoring more upside, I had a beautiful plan on NVDA today. For the tier 2 members, I do have the NVDA room, and I wrote to the untrained eyes. This was at 9:25 this morning, right before the market opened. To the untrained eyes, this chart just shows a bunch of lines and candlesticks, which it does. You look at Uncle's chart there, that is a bunch of lines and candlesticks. But then I wrote, but you guys are master traders and can see the cup and handle. You can see that. Go on there, you see the cup and handle. There's the cup, here's the handle. Beautiful. I know my master traders on the Discord saw it, and I wrote for a breakout 183 and 184.5 must clear hopefully today, and put new all-time highs in place starting with 186, then 188 and 190. If it's truly pullback time, 181.5 and 180 must fail to put those lower targets in play. So we just follow the price action, and today it never broke down support. It stayed above 180 and it cleared those other resistant levels, 183, 184.5 and including 186. And as long as above 186, that level right there, that blue line, as long as above 186, 188, 190, 192 will stay in play. I do not recommend going short unless we get a false breakout setup. For the false breakout setup to trigger, I need to see 184.5 fail, because multiple times we tested that area as resistant. Finally got the break above it today. So if we want a false breakout setup, we need to see 184.5 fail. And if that level fails, I would go short. I would buy puts. Otherwise, stay bullish, more upsides incoming. Here is Tesla. Had a doji on Tesla. I was watching to see if it can take down the low of yesterday's doji, yesterday's candle, which is at 439.5. For an intraday setup, we did manage to break down 439.5, going down to a low of 433. It was a pretty nice trade intraday, but that's all it was, because boy oh boy was the dip bought up. So from here, I'm looking at 445.5 as the critical resistance level for tomorrow. 444, I'm still watching. 444 and 445.5 clears. We're likely going above 450. I would not get bearish unless 442 fails. That's a support level. That's a fib level. But also watch the 5 DMA. It's starting to slope up more, and it's around the 439 area. So if that breaks down, give us the daily chart close, then maybe, just maybe, we can go test those lower targets. Imagine it goes for the 20 DMA. That would be a beautiful move to the downside, but it will start with the loss of 442 and 439. IWM managed to bounce off the 20 DMA. It was looking bearish this morning, but that end of day recovery was amazing. Bouncing off the 20 DMA, still managing to look bullish in my opinion. And above 241, I'm going to remain bullish in favor. We go hit 243 and 245. And I think IWM is putting in some putting in some higher lows. So I do think we're going to break 245 and go beyond this time. So Unco is bullish, but I will change my mind and cut my losses if IWM breaks down 241, 239.5. That's a critical level, because if we break down that level, it will take out a crucial buy zone and it will put the price below the 20 DMA, which is very bearish. So if that happens, I would be bearish, but otherwise I'm going to remain bullish on IWM and favor more upside. And last but certainly not least, here's the VIX, guys. Is nothing. It's above the 5 DMA, which is good, but 16 to 16.75 is the chart range. 16 to 16.75. Wherever it breaks to next, that'll tell us to be bullish or bearish. So above 16.75, we can favor another $2 move, possibly. And below it would be bad news. We'll lose volatility. Put in 15.25 and 14 back in play. We don't want to see that. So, and last but certainly not least, here's Apple. Almost forgot to cover that one. Yeah, it's just chopping right now. It's in the contraction phase, but the expansion phase should come back very soon. And if the expansion phase is to lead to the downside, 253.4 still must fail, and as well as 250.8. Those are the two critical support levels. Both must fail. We get that multi-day move to the downside. Should be explosive. But if it is to the upside, once again, 255 and 256.7 still must clear. We're overall in the contraction phase, which means it's chopping, consolidating, building strength for the next trend move, but it's coming soon. We know the levels, and once we get the break of range, we're gonna make lots and lots of money. As far as the DarkPool levels go, 666.31 is that level. 4.8 billion in premium, guys. That is a lot. We even had $980 million at the 666.30 level. That's literally 1 cent below. So that's very close to 5 billion. 666.3 is the level to watch if you're concerned about the dark pools. Above it, we can favor more upside, and below it, just maybe, we can drop down lower. The next big amount of dark pool levels at 663.5. It was about 925.6 million in premium. If that matters to you guys got the info. This is all from Cheddar Flow, okay? I love y'all. Hit that like button. Make sure y'all subscribe. Peace.